Safe havens are moving higher. That includes gold metals and government bonds. So in return, of course, the USDJPY is falling lower, was falling lower actually, at least the day before. Yesterday it raised a little bit as there seems to be a suggestion that markets are scaling back from risk of an escalation. And that is because although we still have, of course, tensions between US and Iran, just started, not just although we still have, they just started. There is, the question comes into mind whether Iran will be allowed to disrupt oil shipments through the State of Hormuz. And that's because China is a very big importer of oil from that region, from the Gulf region, around 50% of imports actually. And that makes things a little bit more complicated, which makes us think whether Iran is actually going to succeed with disrupting oil shipments, at least from in the State of Hormuz. The first retaliation move most likely to take place is this, but then it might be quite soft given this information. Now, of course, USDJPY moved to the upside, and that follows exactly the projection that we have made a couple of weeks ago. We've moved to the downside. We've either finished wave A down here with wave B likely to end actually near where it is, or maybe a little bit higher to 108.73. Or even to 109, that would be the latest move to the upside. I think anything above here would most likely invalidate the move to the downside. And then we should have wave C, okay, which is going to take prices to 107 or maybe even lower, which is a 50 Fibonacci retracement, or lower to the 61.8 at 106.50 or something. Now, the other scenario would be that wave A is not finished yet, okay? That would see these move to the downside with a different eye, which means that we are wave 1, 2, then 3, extended 3, 4. We're going to have wave 5, and we're going to take out the 3.618 extension, which is around 107.62, and then most likely going to see a wave B to the upside around most likely the same levels, if we consider that we're not far from we reached the 107.75 instead of 107.62, so we're talking about 15-20 pips. So still be looking for that move to end around this level, maybe above 109 if that were to happen, and then we should be looking for prices to move lower. We don't want to cross below that 106.75. If we do, then this would invalidate the upside in the medium and longer term, because that is going to take prices below the high of wave 1, okay? Now, the other pair I wanted to look for the day is the euro dollar, and I want to look at the euro dollar because it's been moving actually along with the dollar yen yesterday. It has moved, and at the same time, we've got some European data, retail sales today, as well as the ISM non-manufacturing PMI later in the evening. Now, dollar is moving again as we expected. We're looking at this as a fifth, the last wave to the upside, right? Impulsive. I'm still expecting, since we've seen this retest over here, I'm still expecting this to move higher to around 112.80 or so. I mean, could even go to 113 just to take out those levels and the stop outs. But what we have to shift our focus on now is whether this correction down here is going to continue or not. So we've had a move to the downside with this descending trend line remaining strong pretty much, right, dynamically speaking. And now we're either looking for 1, 2, 3, 4, and 5, with most likely an extended 3, right? So we should be looking at 1, 2, 3, 4, and 5 instead. Or these, excuse me one second, go back here. Or if we see that moving lower, okay, then we're most likely looking at this becoming a zigzag, okay, an ABC, which should be looking to to take prices down to around 111, but not below wave 1. That would invalidate this move as an impulsive. And of course, we should be looking then for a different pattern to form. Then even this correction could lead to another move to the upside that is going to take out 112.80, 113 levels, okay? Now, we talked about this, of course, potentially being an impulsive move as well, because we still look at this with a corrective projection to the upside, ABC. If that was the case, right, it means that we're still looking at this being an ending pattern over here, 1, 2, 3, 4, and 5, as I have been actually looking at this over the past few months, I would say, and that makes that a good correction. Or if that doesn't take place, and if we break actually above the 112.80, 113, then we should be looking at this being 1, 2, 3, 4, and 5 that ended down here, and this is wave 1, 2, 3. The truth is, this move to the upside, at least this one is okay, quite impulsive, but this last one over here, this is wave C, it looks quite corrective, to be honest. So I'm leaning towards the idea that this is indeed a 1, 2, 3, 4 over here, and 5. So in the medium and longer term, in the short term, we are looking for this to be bullish. In the medium and longer term, we're looking at this to being bearish.